Hey everyone, it is Evan here from the Trade Risk on Friday, January 3rd, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So happy New Year, happy 2020, first market recap video for the new year. We have a busy week, things to talk about, lots of changes here going into the new year. We had headlines hitting the tape here in the morning, early morning, with Middle East macro events that the markets were dealing with today on Friday. So let's jump into it here with our dashboard. Take a look at what's gone on. We can see that the major indices all closed firmly in the red here today, led lower by the Nasdaq 100. We can see the 5-day change numbers trying to stay positive. They're mostly flat except for the Russell 2000, which is in negative territory here over the past 5 days, and it is below the 10 SMA here. All of the other major indices are still above many of these key simple moving averages. When we scroll down and take a look at sectors here to start off the year, it's definitely a changing of the guard. We have energy at the top of the list, followed by industrials. Both of those pretty new here at the top of the list. Technology has been hanging out in some of the stronger, in some of the past weeks here in terms of relative strength. On the downside, biotech unwinding some of its strength that it saw throughout December, followed by materials and staples. In terms of major markets, we get a pop here in the VIX today. Gold is working. Commodities, generally speaking, are working here, getting a nice bid. Oil is number 3. On the downside, minus commodities on natural gas is one of the few that's still standing alone, underperforming. You can see that's still lagging. Dollar still underperforming as well. And then you can see the SPY actually down here in slightly negative territory. So let's jump into the charts here. Let's take a look at what's gone on. Remember, it was a holiday shortened week. We had markets closed for New Year's. So if we clean up some of the lines here on the chart, we can see that this was the weekly candle that we were left with. So we're looking at the S&P 500 cash market weekly time frame, where each bar here represents one full week worth of trading. We can see that we had basically an indecision week here. That's what this in isolation this candle would represent. We, in other words, tried to push up, we tried to push down, we effectively closed exactly where we opened on the week, just slightly down and in last week's range. So this kind of tells us that we should be on that wait and see mode, waiting to see how the action follows up next week when you have something of an indecisive candle like this. But when we zoom out here and we look at the big picture, this really should not be too much of a surprise to see the market finally taking a little bit of a break, a little bit of a pause. Even a pullback here is certainly welcomed and arguably overdue, just given the fact that we've been basically running higher in a straight line since the start of October. We really haven't taken too many pauses here. The S&P 500 has been grinding up to new all-time highs. So when we look here at the action, when we switch over to, say, this view here with a few more just near-term horizontal levels, let's go down to a daily chart and start to measure risk and start to map out some of our points to our reference points. We talked about this level here in our midweek video this week. We talked about the short-term line in the sand here at 32.19, call it 32.20. We briefly undercut that on Tuesday, but then we closed strongly. We pushed up to new highs here for the first day of the trading year. So again, we started the year off with a nice uplift here to the upside, and then with some of those headlines hitting on Friday, we basically got the rug pulled from underneath us. We pulled back down, we filled the open gap here, and then of course we closed lower on Friday. So when we look here at the action of the S&P 500 on a day-to-day time frame, 32.19, you could arguably say maybe that should be a little more refined to effectively the lows or the open of Tuesday, which comes in more around 32.15. But this general area here, I think, is your upper level short-term momentum risk measures, if you will, that you can pay attention to. If we get below that, we can start to reference some of the other levels that the market has cared about. So 3189, 3190, 3153. This is definitely the bigger one down here. And again, I think like we talked about in Tuesday's recap, if we do get down to this 3153, it is only a 3% pullback off of all-time highs. So if this frightens you, if a move down to 3150 seems alarming or seems like it could really be disastrous to your portfolio, then either mentally prepare for it or certainly prepare your portfolio for an event like that eventually happening, right? Whether or not it happens in the next coming days or weeks, we'll eventually see a bigger pullback, and a level like 3150 is something totally reasonable that the market could start to run to if we are going to see a real pullback, a more severe sort of pullback start to get underway. So that is the S&P 500. Those are the levels we can start to pay attention to. I mean, as it stands now, when we look at this gappy action here and kind of the the slightly increased volatility that we've seen over the past 3 days, it would not be too surprising to see this really kind of turn into some type of short-term top here, where the market, maybe we get back up and test it, but maybe we go sideways here at minimum for the next several days to maybe a week or so, and just kind of develop in a range here that seems like where we could be headed here going into next week. So let's maybe prepare for that, maybe some two-way trading, maybe a little bit of back and forth, slightly increased ranges. I think that seems like it would be, kind of the very reasonable path for the market to take right now. Of course, if we start just, romping, stomping back to the upside, if the market gaps up and closes over this level strongly on Monday, then maybe this is all, behind us and it doesn't care, and we're continuing to play in the uptrend, and the song continues to grind higher. So we'll see if that happens, but, if I had to think about my thoughts here on where this is headed over the next week or so, I'd say a little sideways trading seems pretty reasonable. Otherwise, we got our levels to pay attention to on the downside. Now, if we look at volatility here, just at the beginning of the year, you can see that we did get a bit of a pop here. Of course, it did cool off, nothing totally drastic. We got as high as 16 on the session. We closed down around 14. It was a 12% pop in volatility today. So still, kind of historically low levels for the VIX. It does seem pretty in line with the ranges that we're seeing out there in the S&P 500, but we're getting a little bit of pop here. We'll see again how this shakes out and follows through into next week. Now, the S&P 500 closed positive here we're positive for 2020. We're positive in the S&P, in the Nasdaq and the Dow for 2020. The Russell 2000 is back to its old ways here of underperforming. It is negative so far to start the year off. Of course, 2 days, so there's no big statistical significance there, but it is negative so far on the year. It's pulling back. It's kind of orderly here. It has broken this trend line that it was grinding higher in, and we talked about some of the underperformance and lagging nature of it as it was rising here a little more slowly. It broke just earlier this week, and then you can see it's kind of just in this little pullback phase here. So the Russell, when we look at it from a bigger picture perspective, it is still above this 160 area. That's a great spot for it to stay. If it can continue to hold the breakout that really occurred here, call it, at the very end of November, but really throughout December as this breakout got underway over 160, that's really, I think, where you want to see that strength maintain. You want to see price action stay above 160 or so. So that's the big kind of, goalpost you want to see the Russell maintain. In the short term, a little bit of a pullback or sideways seems reasonable here, but if we start breaking back below 160, that I think would be some cause for concern. Now, if we look at the Nasdaq 100, you can see this here also, really just is still just trading under its all-time highs here. So we made all-time highs, strong all-time highs there on Thursday. We had the headlines come out on Friday here. We pulled back, closed down 1%. Didn't even really fully fill this gap here from the new year. Notice volume is high these past two sessions here. So, we'll see how this gets followed up next week. If we want to look here at this slope here that it's been rising at for the past, for the past month of December, we're kind of on the other side of this trend line now. We obviously had a slightly we had this pullback in here too. So this is the horizontal near-term higher low, if you will, that you want to pay attention to. So again, in the short term, if we start to see Qs breaking below 212 or so, that again could signal that we're opening up for a slightly bigger pullback in the equity markets. So that I think covers the major indices. Let's look at some other major markets. If we go to TLT, this here is having a strong start to the year. So we're up 1.31% this week here, and most of these gains coming really just from 2020, the start of the new year. We were up 1% on the first trading day of the year. We were up 1.5% on Friday on today's candle session. So it was a nice strong move there, a breach and breakout of this trend line. So as we've been pulling back here throughout December, we launched above it, did it on some heavy volume. So TLT in the short term, getting some breakouts, getting some momentum, breaking trend lines, looking good here for TLT. Again, when we look at a weekly chart, it's still very much in the holding pattern in this longer term consolidation. So again, know your time frame on where you're kind of analyzing this, but short-term breakout, short-term momentum, let's see if that can persist and continue on a weekly basis. Gold also breaking out this week and particularly this year. We have a kind of a follow-through week, if you will, from last week. So the last week of 2019, we had a nice strong 2% move up in GLD. Again, short-term momentum started that week. Didn't quite break any weekly structure. Broke this trend line here, but it didn't get above this 142 kind of horizontal resistance area here until this week, where we got the follow-through and a close at new multi-year highs on a weekly basis. So gold does seem to be in motion higher here, in kind of breakout territory, and especially with the volume and gap up we see today, GLD is looking pretty good. It is coming into some prior resistance. So again, we look at the September highs here. It's got a, if you're looking at a true sort of breakout, if you're looking at 52-week high breakouts, or you're looking at longer term levels, you may still be hesitant as this gets back up to where it peaked in September. So again, depends on your time frame, but MACD leading higher here, got a series of gap ups, certainly stretched in the short term, but some good strength there for GLD. Lastly, if we go to energy here, we look at energy and commodities. We can see USO continuing its move to the upside, up 2% to start off the week, or to close out the week. You can see it is coming back into some prior levels here in April and May of this year, where it stalled out, and frankly it did stall out here when it had this brief uptick in September. So we'll have to see how it reacts up here, but it's been grinding higher. It's been in an uptrend in the short to maybe intermediate term, I suppose. I guess multi-month here, so it is very much intermediate term uptrend as well, and we'll see if it can start to break through some of these prior levels that we saw in 2019. Natural gas seems to be continuing to grind lower here and really just start off the year in a tough spot. It had a rough 2019. It's been diverging here for quite some time. It's been in a downtrend for quite some time. It had some brief moments of looking like it could bottom out here and looking optimistic in here, and we had some encouraging notes when natural gas was down here, putting in some higher volume and looking like it could start to turn around and put in some bottom, but it really just could not hold itself. Had a couple of attempts and did get some nice tradable, maybe swing trades into these pops of 20% or so, but ultimately the longer term trend still remaining lower. Volumes coming in hot here. It's coming in pretty heavy, above averages, so we can still pay attention to it, still sort of in play, but right now still dominated to the downside. So that covers the major markets. Let's look at some of the sectors here. Let's take a look at what helped lead and lag this week. So at the top of the list, industrials here, and it is getting a breakout here. This is an actionable breakout. We talked about this in our sector recap, believe it was last week, in this sort of holding pattern here, as it was consolidating sideways underneath resistance, looking actionable, looking pent up, so to speak, and it is starting to at least attempt to break out here. Of course, it put in some great relative strength on Friday as the broad averages were down, close to 1%. We can see XLI was down just about 19 basis points. So, and doing it on heavy volume, gap down, closed near the highs. So XLI seems to be in motion here, seems to be in play. I would pay attention to this for breakout, rotation, and potential continuation higher next week. XLK, again, still kind of hanging up here near highs. It's pretty extended. Again, not as actionable as, say, an XLI, which is more of a fresh breakout. XLK has been running here, so if you got, positions, you can trail your stops and manage your risk. Otherwise, don't see a whole lot new there for XLK. And last but not least, discretionary, a little more actionable here. Again, this is coming out of a fresher, longer-term breakout. So really, if we're looking at this over, a 6-month breakout that really occurred here in December, we could still be getting on, under our way here to new highs. MACD's, continuing to lead here. So XLY, still a fresher spot as well to pay attention to. Now on the downside, XBI. So this is biotech. Smaller cap biotech or equal weighted biotech. This had a very strong November, 14, almost 15% higher in November, continued a little bit in December, but really just got off to the races and ran pretty hard over those 2 months. We are now in the state of pulling back. We broke this accelerated trend line here, and we're sort of in pullback mode. Doesn't, really doesn't look structurally all that bad. It seems like we're just getting a welcome pullback, which happens in uptrends too. So XBI, what we'd be looking for is for bulls to put in some type of higher low here in the coming days or weeks. And then maybe we can, use that to measure risk against and maybe jump aboard a trend. But XBI pulling back here. IBB, pretty much the same thing. So it's just a market cap weighted biotech. We'll skip that. If we go to XLB, this is pulling back here. So underperforming on the week, down 2.72%. And materials never got the breakout from, say, 2018 levels. So again, if we go to a weekly time frame for materials, notice that we basically ran right into the upper end of this range from 2018. We briefly poked our head above it, and then we kind of just, this week especially, came, pulling back down below it. So XLB here needs to get back over $61, needs to start clearing this overhead supply. Would want to be a little cautious there for XLB until it's back over 61 or so. And last but not least is energy. Energy here, third worst performer on the week, 2.5% to the downside. It had a pretty rough gap down at the last day of the trading year. It came bouncing back early on Tuesday and Thursday, but then it started to give back some more gains here on Friday, doing so on heavy volume. Oil's been working. XLE still being a little bit stubborn here. Maybe it's still kind of in the process of trying to put in a bottom. It is holding above the trajectory that it was kind of declining at longer term. So, you could make a case that if it loses $59 or so, that's when you'd, again, want to throw in the towel here again and give it up to the sellers. But it's perhaps, bottoming out, but still kind of struggling and still pretty messy there from from a momentum perspective. So that's it. That's what we got here for 2020, first close of the new year. Again, as always, thank you so much for tuning in and watching. You can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great weekend. We'll see you back here on Tuesday for the midweek market recap video.